Hi, I'm Heather with Rental Property U, answering questions from the internet on rental property investing. Tonight's question is, should I form an LLC before I buy my rental property? No. Okay, thank you everyone. Have a good night. Just kidding. No. A lot of times it depends, but the answer to this is no, and here's why. Look, this is a process. It's a lot of moving steps just to get the transaction done. And you got to focus there for most people, because most people that buy rental property that are normal people like you and me, they work full-time jobs, they have families, they have responsibilities, they have a lot going on. And in the transaction, it's like 100 steps just to get from the first point of contact of I want to buy a rental property and have the real estate agent qualify them to the closing day. And there are so many partners involved just in the transaction: realtor, lender, title company, underwriter, processor, escrow agent, assistant, inspector, insurance person, home warranty contact. And then if it's new construction, then you've got a builder representative, and then you have a construction foreman if you're building the home from scratch. And there are a few other little possible vendors, maybe you have to call a plumber because the home inspector suggests a plumber needs to look at it. So that's a lot of new connections. It's a lot of managing, and it's just a quick moving thing, especially when you get under contract. And I wouldn't suggest you get the LLC before you go under contract, because it's just too many things, and you can't use it from really the beginning, because you have to close in your name. You have to close the property in your name if you're doing residential financing. You can't close it in the LLC's name. The only way you can close it in the LLC's name is if you buy a commercial property. Then you close in the name of the LLC for financing. If you're paying cash, that's a whole nother story. Most people finance. If you're paying cash, yes, you can get the LLC first. So, okay, I take that back. So is it an absolute? No, look at me. I didn't qualify. You see, that's why qualifying is so important, because there's no blanket answer for everyone in every situation, in every case. So I'd like to detract my original no, and I would like to start this video over. Take two. Should I form an LLC before I buy? It depends. Okay, but if you're doing cash, I would say yes. If you're not doing cash, I would say no. So if you're going to do a mortgage, you need to just focus on the transaction and get that done. Now, even if you buy with cash, it's okay. You can still close in your name, and then you set up the LLC at a later time, and then you're going to do what's called a general warranty deed transfer. It's a title company document that they can do and take care of, and it's just filed at the county level. It's a piece of paperwork, not a big deal. Now, you would also do that same process if you had a mortgage. And here's the thing, this is the first business decision you're going to make, because you see, when you change the title name from your personal name to an LLC name, when you have a mortgage, it could trigger something in the loan documentation that you signed called the due on sale clause. Now, what that means is the bank could call your mortgage note. So if you owe $300,000 on your mortgage note, they could call that whole thing due and payable within 30 days. So you'd owe $300,000, whatever the note is, whatever the remaining mortgage amount is, in 30 days. That sounds very scary. It sounds very risky, and it is, but it's very, 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 very rare. And what you won't do is call the mortgage company and tell them you've changed the warranty deed. You're not going to do that. You're just going to do it on the back end. And as long as you pay your mortgage, the banks aren't in the business of foreclosing and calling due on sale, because they make a lot of money on your loan. I think it would be probably very advantageous for us to run an amortization schedule one day. What do you think? Would you like to see that? Would you like me to walk you through how an amortization schedule works? That tells you how much principal and interest goes from your mortgage payment, and how much interest the bank is making, and in how many years and how long. So over the 30 years, which most people don't keep a mortgage 30 years, it's very rare, but you're going to pay majority of that interest the first 15, but really the first 10, and more so the first 7, and more so the first 3. And that's why also refinances are not always the best option. But I digress. We want to know about filing an LLC. So I suggest if you're getting a mortgage, you just need to get through the transaction. And then after you close, once you get settled in and once the tenant gets settled in, and you get it leased out and you kind of get back to the normalcy of your life, then we're going to do something called the first four pillars. The first four pillars. It's the first four things you need to do the first year after you close on your rental property. One pillar per quarter is how I designed this. And this just gave a structural, programmatic, organized way to do the main business activities that need to be done in your new rental property business after you close on the property. Now, there are some nuances with this where you don't have to file your LLC right after you close. You're still operating as a business, and you can amend your taxes at a later date. If you choose to not file your LLC, you can amend your taxes up to 3 years. So even though you didn't file the paperwork of your LLC, you were still acting as a business, and you can go back and amend your taxes to reflect that if you don't end up doing your LLC right away. But my advice is we need to get the LLC done, and a lot of people take it very passive, and they don't understand the value of this thing, of what it unlocks for you. And that the reason is because that's not how the culture talks about or thinks, especially if you're a first generation wealth builder, first generation soon to be millionaire. You don't understand what the tax strategy is, the code, what the tax code says, how the IRS works for business owners versus consumers, which is what most likely you are or were before you became an rental property business owner. But the first four pillars, the first one is legal, setting up the legal, and it's typically an LLC. Typically, most people just do an LLC in the state in which the property is owned in, or you could do what's called a series LLC. The series LLC allows multiple properties under the one LLC, but each series, A, B, C, D, each series would have its one property in each series. So whereas the LLC, if you had four properties, all four properties would be in that LLC. There's pros and cons to both. We won't go into this video. But yeah, you want to set up your LLC, and you want to get an EIN, a federal tax ID that allows you to open a bank account, which is what you want to open a bank account. And then that's the thing you're going to do in the first quarter. Now, again, this doesn't have to be so particular. If it doesn't happen exactly in the first quarter, it's just an idea to say, okay, about 3 months I'm going to spend on this thing. Okay? So even if you start a year after you close or 2 years after you close, it's okay. It's okay. But and a lot of people don't know this. That's why I built a program for people to help them do it, because nobody was doing it and everyone was kind of just leaving it on the table. And they weren't taking the business behind the rental property business seriously. And that's where I saw the most opportunity that people were leaving on the table. So, so you're going to set a business entity, typically an LLC, get a tax ID, set up a bank account. That's the first pillar. Second pillar, tax strategy. That's going to unlock the pathway to start discussing, learning about, talking about, getting to know the tax strategy, which is part of the iceberg under the ocean. You know, the iceberg, like, you know, they say if you see that much of an iceberg, you're like, wow, that's big. But really what's really big is what's under the ocean. That's the big part of the iceberg that you don't see. So LLC is one of the parts of that. Tax strategy is another part. And it's very exciting stuff. This is one of my favorite things in the whole wide world to talk about, think about, strategize about, learn about. It changed my life when I learned about it in 2013. It's 2026 now, so 13 years ago. Changed my life, truly. It truly did, because it unlocked financial opportunity that I did not know I had access to, and I absolutely did. And when you have a rental property business, even with one active, properly structured rental property, which is what an LLC is, it unlocks it for you too. So it's a big deal. All right. Pillar 3 is bookkeeping and like data file organization. Okay, so we're going to talk about bookkeeping strategies. This would be about 6 months. Okay, so the first pillar, 3 months, second pillar, 3 months. And then about that 6-month mark, we're going to start on the bookkeeping. So that could be a variety of ways. You know, you could use QuickBooks, which is what I use. You could use spreadsheets, which I've also used that. And honestly, on some of my businesses, I do use spreadsheets because they're small. But I usually use QuickBooks, and I've used QuickBooks since 2009. I'm a big fan of QuickBooks. I just like it. Plus, some people will use Mint, but Mint is more of the personal stuff. QuickBooks is more of the business stuff. So, again, it's a shift. It's not about QuickBooks being an expense. It's about you being a business owner and needing to operate like that. Bookkeeping is a very neglected, passive, in the defensive category, and you need to get in the offensive position on bookkeeping because that gives you a lens of where your business goes. And every CEO reads reports. It's required of their job. So now that you're a business owner and you're the CEO of your rental property business, you need to read reports. You just need to adopt that mindset. It's a game changer. And then organizing your files, whether that be a paper file folder, perfectly fine, or online in a Google Drive or on a desktop in your computer. You just need to know how you're going to keep notes and how you're going to keep track of things. Like, are you going to use the notes, on your phone? Like, are you going to use the notes on your phone to like keep track of if the water heater breaks or you have a big expense or the tenant gets evicted? And the reason why you want to keep track of that is because pillar 4 is the annual audit. It's the annual audit. And in that audit, it's very important. This is when you analyze all these things. And you're going to analyze the LLC and the legal structure. Then you're going to analyze tax strategy. You're going to analyze bookkeeping and file organizational techniques and tactics and just how to automate, organize, orchestrate your business, how to collect reports properly, how to analyze those reports, how to read the reports. Believe it or not, they're actually kind of complicated to read. I still find them complicated to read. And the balances, when I get a report from the property manager, it like never equals out. It's confusing. So you really need to get your head around this and understand this and just step into the role that you're a business owner and taking responsibility for these things that your peers would probably not value, because they don't run a business. So the culture, the community, the table talk, the water cooler talk, the party talk isn't going to be around this. This is why you need the right community to help you unpack the present and the gift in which you received and learn how to use it. Because if you don't know how to use a powerful thing like an iPhone, you're probably leaving a lot on the table about what that thing is capable of doing. Well, that's how this business is. And you just don't know what you don't know, right? So if you're going to spend the kind of money that you're going to have to spend to get in this business, if you're going to commit to the time frame, the long game time frame that this business requires, it's not a quick business. This is a get rich slow business. It's a generational wealth building business, but it's get rich slow. And believe it or not, that has some positive things when you get rich slow. But you're gonna, and it's not passive. And so you're gonna need to, if you're gonna do all that, like get the most out of it. And that's what the 4 pillars unlocks. And so also on that 4th pillar annual review, we also talk about it. And I say we, like you could work with me, but I'm also giving the information to you on the video so you can know like what do we do? How do we do it as professionals? So you can do it with yourself or your spouse or your partner. If you don't work with us, I want you to be successful too. And I know not everybody is going to be able to work with us, but you want to talk about like, what are the repairs? So that's why you need to know what they are and where they are, because I'm telling you, you're not going to remember what happened 10 months ago. You're just going to forget. So you want to organize that as you go, and you want to have a system to do it. You want to think about like what lessons you've learned, what happened with the tenant. You want to think about, we want to analyze the rent. We want to look at a market analysis. We want to run a balance sheet. We want to build a balance sheet. It's very important to build a balance sheet. Most people have never built a balance sheet in their whole life. If you're a normal person like me, I never did until I started building a business, and then I had to. But if you've never built a business before, you've probably never built a balance sheet. So that is important. You need to know your assets and your liabilities, which is your net worth, and you need to know the value of your assets as they change over time so you can analyze your investments and see opportunities for how to adjust cash flow and equity, and how do you use this asset for your benefit in the short and long term. We talk about like other things under the iceberg, like cost segregation as a possible opportunity to reduce taxable income. We talk about, like, again, refinancing if it makes sense. Usually, well, I'm not going to say that. We'll get into that in another video. And just other pivots, maybe home repairs. Maybe you need to do some updates, and what are the colors that you need to do, and what do you need to do? What does the tenant need versus what do you think you would want as a buyer, which is two totally different minds. And again, these decisions are expensive. I mean, if you're going to change the floors and you're going to go from carpet to laminate, does that make sense? Because, you know, on an average size 1,800 square foot, 1-story home, leaving carpet in the bedroom, tile in the bathroom, you're probably looking at 1,000 feet. That's probably 6,000, just off the cuff. But then we could do like a luxury vinyl plank, which would last longer and works better for tenants. Maybe that saves you a couple grand. And then the colors, what to pick, like in 2026, what are the trends? What's going to last you another decade? You know, gray's not the answer anymore. Grays are over. So is it beiges? Is it honeys? Is it more of the red tones? Are those coming back in? So you need to know those things. You don't have to know those things. You're not going to screw it up, but those would be helpful to know. What do you agree? So you can make the best investment. So I hope this helps you answer the question, should I form an LLC before I buy? And yes, so the first 4 pillars will help you be successful as you begin your rental property and business and unlock the magic that this industry holds for you. Have a great day. We'll talk to you later.